Alrighty, guys, it was another fantastic day in the markets today. Excellent, excellent, excellent. So my name is Chris, and I am the Algo Man here on TikTok. And today is October 1st. Can you guys believe that? I mean, boy, time sure is flying, guys. And I'll tell you, today's recap is all about structure, precision, and predictability, the thing that we love most. Exactly what you need when you're trading the micro ES and trying to get funded, okay? So what we're doing today is we're pulling up the 15-minute chart, which is this chart we've got here, of the micro ES, because if you want to stop getting chopped up and stop scaling blind on the 1-minute chart, market structure lives on the higher time frames, whether it's a 10-minute or a 15-minute chart, guys. I emphasize these a lot, okay? And with tools like CYMO and predictmo, you really get visibility into where the swings are happening and how to time your entries with precision, all right? So what we're going to do is we're going to start with CYMO on this 15-minute chart. No noise, no distractions, just clean, clear structure. Now, you guys know what the market did today, okay? And it was pretty simple. You know, early you had some cyclic action, then a strong trend emerged, then it compressed again near the end of the session. With CYMO, all of that became obvious, and you'll see it instantly here on the chart, okay? So once we establish structure with CYMO, okay, we're going to overlay predictmo, which is really important. And I'm going to call predictmo from now on the prop firm killer, because that's exactly what it is, okay? And let it do what it does best, right? Predictmo is really good, guys, because it calls the rotations before they're obvious. It's going to help you nail key reversals, but it's also going to help you spot high probability entries to give you more of an edge. But I'm going to show you a different way of using predictmo today that you haven't thought of that might give you a little bit more perspective in the higher time frame, which is really, really important, okay? So, and if you've been waiting for a chance to try predictmo by itself, guys, you definitely want to listen up to this, okay? So I got a real big announcement for you to make right now. So predictmo is now available as a standalone indicator, all right? That's right. You no longer need the full suite to start leveling up your game. Just click the link in my bio and look for predictmo, the prop firm killer, and you'll get a 7-day free trial and instant access, okay? So whether you're taking a funded account challenge or just want more clarity in your trades, this is your weapon of choice, guys, and it's now available as a standalone indicator. We decided to roll it out this way, guys, because, you know, I'll tell you the truth, we've had so many email inquiries from guys just wanting predictmo and predictmo and predictmo that, you know, me and my team here just said, you know what, let's just go ahead and roll it out as a standalone tool, and it's available to you guys in the link in my bio, okay, as a standalone, okay? Do you have a download app for smartphones or PC? Or, well, let me, that's a good question, Solo Leo. The tools on NinjaTrader are not cross-platform compatible, which means that what you code in C# cannot be used in the web version of NinjaTrader or the mobile version of NinjaTrader. They actually coded those in different languages. So the tools that you have for those applications, whether it's a smartphone or anything else, the web version of NinjaTrader, they're all coded in different languages. So the only tool that actually runs our tools is the desktop version of NinjaTrader, okay? And that's just how NinjaTrader is set up to work. You know, that's not something we did. That's something NinjaTrader did by design, all right? No, and it's only exclusive to the, these tools are only exclusive to the NinjaTrader platform. And yeah, absolutely, man, no problem. And I've been asked that question before, so, I had the answer for it. So I appreciate you bringing it up and making everyone aware of that. Yeah, I'm an exclusive vendor, guys, on the NinjaTrader platform, so I don't have any relationship with TradingView, and TradingView is all PineScript as well. And honestly, I'm not at the point of learning another coding language at this phase in my life. It's just too much at this point. All right, guys, so let's go ahead and dive right into this. Thank you again, guys, for being here today. We're going to dive right into this and see how this shook out, because we got a lot of detail to cover today, guys. A lot of little minutia, but it's all really, really super important. I got a lot of other cool stuff I'm going to show you guys too today, so stick in. All right, 5, 4, 3, 2, 1. Bingo. Here we go, guys. Right here. Okay. And we'll just let this bad boy run and do its thing, and then we'll go ahead and I'm going to break it all down. And there's just a lot of stuff I need to go over with you guys today, so please hang with me, okay? First bar of the day, guys. Big down wick right there. Almost seemed like the market wanted to tank. The market is definitely cycling. Why do we know it's cycling? Because price is inside the VWAP, and it tells you up here, if I pull this down a little bit right there, you see right there, it tells you right there that the market is cycling, okay? And if the market is cycling, you know, this is the second bar of the day on a 15-minute time frame. Let the market do what the market does, okay? You just had a nice little trend to the upside right there. You can see it right there, right before the market closed, okay? You had cycle 1, you had cycle 2, and you had the end of cycle 2 right here, okay? So remember what I've always told you guys, okay? Cycles precede trends, and cycles follow trends, okay? So if you had a little trend right here going into the close of the market yesterday, it reasons that you're going to have some type of cyclic activity as the market opens, okay? And this is exactly what you have right here. You just had cycle go up above 0 right there, and you can tell that momentum is following right there. So this might be a good entry to the long side right there.
Order filled.
Okay, we'll take a long trade there and see where that takes us. So right now, guys, I'm demonstrating how CYMO Pro works on the Micro ES futures. Okay, and we're gonna let this bad boy run, and let's see what happens. Okay, perfect. Momentum just shifted up. I was worried there for a moment because I saw momentum tilt down, and I'm like, oh crap, you know, is this thing going to continue coming down? Because I saw cycle tilt down too, and I'm like, uh-oh, this may go down, okay? And no, it's actually when you get the crossing above 0 that you follow the signal right here, okay, in CYMO. But you also want to watch momentum right here, because this could easily fool you right here into thinking that this is a potential exit, okay? If momentum tilts down right here within 1 bar, then yeah, this would be a setup to go short. It would be a cycle short setup, but this isn't going down, it's actually going up, and we actually haven't had bar change there. So let's see what happens with momentum, if it actually comes down or continues going up. If it goes up right there, then we're going to hold on to the trade, because we want to see whether this becomes a commencement of a trend to the upside, okay? Kind of the same way that you saw right here in the previous day session. Hey, JPM, welcome over on YouTube. Glad to have you, man. And if you could tell, we just had bar change right now, and momentum isn't coming down. Momentum is actually stuck in the 0.90 threshold right there, and that tells you that momentum is the dominant signal pulling the trade up. Okay, and here we have the commencement of cycle number 1 right here. Okay, so this is the commencement of cycle number 1. Cycle number 1 ends right there, and cycle number 2 begins right here. Okay, this is where cycle number 2 begins, and these are 180-degree rotations in the same direction of the price move. Okay, typically when you're in a trend, you have 2 cycle rotations that are 180 degrees in the same direction of price, like this. Okay, this is the commencement of cycle number 2, which means that we are going to exit the trade at the end of cycle number 2, which is when this cyan line, which represents the cyclic component of the price move, touches or crosses below the 0 line. Okay, so we'll wait to see that happen, and when it does, we'll exit the trade. Okay, there you go. It just hit the 0 line right there. So let's just go ahead and wait to see it cross the 0 line, and we will go ahead and take that trade off. So again, cycle 1, Cycle number 2, right here, you are in trend mode to the upside, which means that you're only taking trades up. Okay, right there, you got your crossing.
Order filled.
That's where you pull the trigger to exit your trade, okay? This is telling you that price is likely to come down, but we want to wait for momentum to actually shift down before we actually pull the trigger on any trade to the downside, okay? Right there.
Order
Okay?
filled.
That's where we're going to go ahead and take the trade to the downside. Now that momentum is also following cycle, because remember what I just said earlier, okay? Cycles precede trends and cycles follow trends, okay? Anytime that price goes above 0.90, like it did right here, okay, the market is set to be trending. And so therefore you start counting your cycles in the same direction of the move, okay, which is exactly what happened right here. After the trend is complete, you normally have some type of cycle. And right here, this is a cycle to the downside. And this ends the moment that cycle and momentum kiss goodbye and cross, okay? And they're pretty darn close to the cross right there, so I wouldn't mind maybe taking that off very, very, very soon.
Order filled.
Okay, not a lot of meat on the bone on that trade right there, but
Order
we'll
filled.
take that to the upside as well. Again, right there, you got cycle going up. And look at this, guys. You got a shift in momentum right there to the upside. If price is going up and you have a shift in momentum, this is going up, okay? The lower indicator on the chart is called CYMO Pro, and it's on the link in my bio. So let's go ahead and look at another example of this, and stick around because there's another couple of indicators that I'm going to be featuring here as well for illustration purposes. And so you don't want to miss those. And this is almost done, this little demo, this quick demo here. So here we go, guys. We got cycle number 1, okay? Because remember, we just had 1 cycle, 2 cycles. You had the trend component right here going up. You had the cycle component right here, which ended when they crossed down here. And now you have a cycle that's going up that ends exactly right here when it crosses below the 0 line, okay? But what's happening with momentum right here, guys? Momentum is still moving up. So if momentum is still moving up and not necessarily coming down, I want to stay in the trade. And remember again, guys, you use a 15-minute or even a 10-minute chart to map market structure, and you use your lower time frame chart, whether it's a 1-minute or a 2-minute, to execute your trades, okay? I wouldn't recommend that you guys take these trades off a 15-minute chart unless you're a self-funded trader. And the reason why is because slippage on the 15-minute can get you in the way that it might violate your prop firm stop loss rules and stop you out. You use this to gauge market structure. Which way is the market really moving? And then you trickle it down to your 1 or 2 minute to execute your trades. Now, the same process can be accomplished in a little bit more minutia and with 5 minutes less delay. If you plotted the same thing on a 10-minute chart, you can do that. If you do it on a 5-minute, you're going to get a little bit more noise because the 5-minute tends to rotate a lot faster, of course, than the 10-minute, right? It's common sense. So here we go. We have the beginning of cycle number 2 right here. Look at this. And that is just going up like a badass, okay? And this trade isn't going to end until cycle actually hits the 0 line again, right there, okay? And you can tell that momentum isn't falling right here. Momentum is flat, okay? It's not a really strong move with momentum, because a strong move with momentum would mean that momentum would be above 0.90. Nevertheless, it's flat, which means price is going up. And now it's really, really in a trend because it busted out of the VWAP, and the VWAP turned green, and this whole thing is just going up, which is nice. It's a good visual aid to have. And it looks like momentum is getting a little bit stronger right here in this portion of the trade. And a trade like this, guys, you're patient, you're not panicking, you're watching your tools, and right there, the moment it crosses below the 0 line, this is where
Order filled.
I want to take my trade off right there. Smack, okay? Why? Because that's the end of cycle number 2. And I know as a trader that the average duration of a trend is 2 cycles in the same direction of the move. Cycle 1, cycle 2. I know that as a law of trading, guys. It's not something I came up with, okay? It's something that statistically is proven over thousands of trades. Now, on a rare occasion, you'll get a 3rd cycle to the upside. That only happens in about 35% of the cases, okay? But in most cases, you're only going to get 2 cycles, which which means that if cycle came down and momentum is coming down,
Order
this
filled.
is a short. That's what that means. And this demo here is almost done, guys. So just hang with me because I got a few more things I'm going to show you today. And remember what I just said earlier, guys. Trends are always preceded by cycles, and cycles always follow trends. Okay, so there you go, right here. Okay, you're almost done with this move to the downside, and it's going to be done the moment that they both cross. This is almost the end of the session right here. You've got only a few more minutes, and I want to see exactly where this is going to end. And right there, guys, you see, you just had your crossing right there here at the bottom, and that is it, guys. This is where you buy it back. You see, just let this bad boy rotate.
Order filled.
And that's it. This is the end of the session. 4:07 p.m. in the afternoon, right there, guys, okay?
Wow, did you see that? That's what you call precision.
There you go. That's what real algorithmic trading looks like right there, guys, okay? It's not subjective. It's rules-based. I kind of walked you through the whole process of how everything works so you guys can see exactly the ebb and flow of these tools. Now, here's the challenge for everyone who's in our tribe. Load the 15-minute MES with CYMO, spot the key rotation zones exactly the way I did, and then the part that I left out, guys, in this presentation is that you guys need to drop down to your 1 or 2 minute chart with Predictmo and then mark your ideal entries and exits on those lower time frame charts, okay? Replay this bad boy and post your annotated charts or send them over to me on Telegram. I love to look at them, okay? And let's see if your read aligns with the process, okay? It's very, very important, all right? Now, if you wanted to see what Predictmo looked like in a situation like this, let me go ahead and bring this bad boy up, okay? I'm going to show you how to use it in a way that's a little bit different, okay? Now, the 15-minute chart is a great chart, and I'll tell you why. Because it has 27 bars in a day, okay? From 9:30 in the morning to 4:15 in the afternoon, which is when the futures market takes a pause, you have 27 bars, which means that in a week, you have 135 bars, all right? So a tool like Predictmo can really be tuned to capture the longer wave in the spectrum. Now, if you don't understand what I'm talking about, guys, we did 2 podcasts on this recently, so you can listen to those and kind of tune in. But here's what you can do with Predictmo, okay? If you wanted to set it to about 120 bars, which is almost a week's worth of bars, okay? Because 4 days is 81 bars. That's about 4.5 days or so right there. It's really capturing the longer waveform in price. And look at this bad boy right here. At 120 bars, it's getting you in right when the market takes off. It's getting you in right here. It's getting you out right here when it dipped a little bit, and it's getting you back right here when momentum shifted up again, and it's getting you out precisely right when momentum died again, right there. Look at this. It's getting you in right there. It's getting you out right there when it shifts down, and it's getting you back up right there again. And it's taking you all the way over here until the very bar that I got out on that trade, okay? It's capturing the longer waveform in price. So if you want to capture that, you can maybe try tinkering with it with a higher setting value right there, okay? And what this does, guys, is that it really does a good job at capturing the long waveform in price. For example, this is September 29th right here. And if you notice, price had gone up, and right there, this is where it faded, and it came all the way down. If you notice, the orange line just kind of stays down until maybe about right there, and then it kind of comes down for a second swing right there. This is only to give you structure, okay? This is not for you to go off and trade off the orange line. Here, it was on September 22nd. This is where the whole wave began going down in price, and it just continues going until right here. Look at this, guys. This is amazing. Right when it actually takes off to the upside again, close to the end of the market, 1530. Okay, so if you want to capture the longer waveform, you can always set Predictmo to a higher setting on the 15-minute chart. And again, that's going to give you a general bias as to which way the market's moving. CYMO, on the other hand, it's going to break it down for you in cyclical segments, okay? And if you notice right here how it broke it down, you had cycle 1, okay? And you had cycle 2, and that was the end of it right before it rolled back, and you had the commencement of cycle 1 and cycle 2 right here. Now, this kind of smooths it all out, and you can probably accomplish the same thing with PureMo as well, okay? So you can compare that with PureMo and see. I think PureMo's by design. I designed it to be a lot smoother than PredictMo, but they kind of both give you the same structure if you're looking at the long-term waveform on the 15-minute time frame. So that's just some food for thought I want you guys to think about, all right? So now, guys, if you're stuck and if you're still over trading and still reacting late and still blowing up funded accounts after funded account, you got to ask yourself, guys, is it your fault or your tools? Look, let me be honest with you. You need an edge. You need structure. And you definitely need PredictMo or CYMO. And you can take the 7-day free trial. All you need to do is click the link in my bio, and you can look for CYMO or you can look for PredictMo, the prop firm killer. All right, it's in there as a standalone tool now. So you can now actually get PredictMo as a standalone tool. We've had so many requests for PredictMo as a standalone tool, so we decided to roll it out as a standalone tool. You can get it as a standalone tool now beginning today, and take this bad boy right here for a 7-day test drive and see how it works on your charts, okay? And put this bad boy to work and see the difference that it makes, okay? Now, you guys have been asking for it, and it's finally ready. Our brand new volatility mapper is complete, and the landing page is done. I finally had time to finish it today, and the tool is polished, okay? All that's left is NinjaTrader's final approval, and it's going to be 100% free to all our subscribers. Now, what the tool does is that it detects areas of consolidation and warns you about low volatility traps before you get stuck in them, okay? I'm going to preview it today briefly, and we'll feature it in full during tomorrow's recap. But here's the thing with it, guys. You want to spot volatility in a lower time frame chart, not in a higher time frame, okay? Because you want to see the exact shifts in volatility as they play out, maybe on your 1-minute chart and 2-minute charts, because those are the charts that you use to track areas of consolidation, not your 15-minute chart. But for the sake of illustration, I'm going to plot it here just to kind of give you a glimpse of what it looks like. And then tomorrow, we'll look at it on a lower time frame chart. Okay, so right here, as far as the tools go, you have 2 thresholds. You have an upper threshold and you have a lower threshold. Okay, the lower threshold in this new tool is designed to spot areas of consolidation, which again are better done on a lower time frame chart. Okay, the upper threshold right here is to spot the movement above average volatility. So if average volatility is 1 and you set this bad boy to 1.8 and it reaches that, it's going to change color. And I'll show you how that works in a second, okay? Now, you've got 2 settings that you can choose. You can either go with a high sensitivity setting or a normal sensitivity, which doesn't make it as reactive as the high sensitivity setting. But here's how it looks, okay? Just so you guys could see, okay? That is how this bad boy looks right here, okay? Now, the dashed line is something that I drew right there. This represents normal volatility at 1, okay? But the moment that it rises above 1.8, this is telling you that volatility is almost 2 times normal volatility right here. Price tends to turn when this happens, okay? This is monitoring right here that volatility just got high in this little pullback right here, guys. And normally when that happens, price tends to turn, okay? So if you're looking at CYMO right here and wondering whether, whether momentum is going to go down and you see a volatility shift like this, this is telling you that, hey, price might turn because volatility is kind of topping out right here in this little pullback to the downside, okay? And then sure enough, it comes right back down. It goes back into normal volatility. And what this tool does down here, guys, it's whenever it sinks below this threshold, you can monitor where you see perceived areas of consolidation, okay, which are areas kind of like this, okay? So that's what this does, for example. So if it sinks below this area, this is telling you that there isn't a lot of volatility in this area. These might not be areas that you may want to take any of these trades as the market is cycling. The market's going to cycle regardless, okay? Because the market's like a swing. It goes up and down, and you have up and down right here in this whole little region, okay? It's just not up and down that's going to make you any money, okay? So if it's not up and down that's going to make you any money, then you need a tool that's going to monitor, where price is potentially consolidating. And here's what it does, okay? And you can change this too. You can really adjust this threshold right here, okay? So if you wanted to adjust it further down, you can certainly adjust it. And if you want to leave it where it is, you can play around with it and see where you want to set your settings right there. So what it does is it sets the base threshold as to where consolidation happens. And you typically will see a multiplier here, a scale variable as to where consolidation happens, and that's basically tracking volatility. But again, this is better tracked on a 1 minute and 2 minute time frame, okay? Because that's where you're going to get the most noise when the market goes into consolidation. That's where you could better see it right there. So this tool is better designed to be applied and used on a 1 or 2 minute time frame, okay? So yeah, 1 and 2 minutes is where I recommend that you use this right there, okay? So if you can tell, this was all nothing but noise right there. And then the moment, look at this, the moment that it rose, it kind of got near normal volatility right there. And then it kind of sunk a little bit right there where volatility just kind of got a little bit low. But you can use this on your, oh, here's another moment where volatility spiked right there. Look at that. Nice spike in volatility. And then all of a sudden, price just kind of turned and went down. And this is, poof, right there. And so you got a lot of examples. I got a whole bunch of examples that I can show you guys here on the chart. And here's another one right here where volatility is just like super, super, super high. And, the market's just going bananas right there. So that's what the tool does right there, guys. And I'll be explaining a little bit more on how to use it on a lower time frame chart as we get closer to its release this coming week. Okay, guys? So stay tuned for that. Oh, let me show you. I didn't show you what normal volatility looks like right there. Oh, hyper volatility. This is what normal volatility looks like. Volatility looks like. And here's how it looks in hyper mode right there. You see that? And in hyper mode, it's picking up a lot of the subtle moves and shifts in volatility right there. It's super, super, super aggressive right there. That's what it does. Okay, right there, it picked up that move. Okay, and boom, flagged it, and the whole thing just came down right there. It's not. Here's the one thing that I want to make sure you got. Here's another good example right there. See this big bar? Now, if you've ever wondered in the morning, okay, when you're looking at price, and we have tools for this beyond this volatility indicator, but if you've ever wondered in the morning, like hot dog, man, is this going to be a continuation of the downside, or is this going to stall? Have you ever wondered that when you're trading? You're sitting there and all of a sudden the market opens and you get this big bar. This is September 25th right here. All of a sudden it just tanks and you're like, holy smoke, look at this. Pricing a huge bar down. This is probably going to be continuation. And if you don't have these tools, guys, you're going to be toast because the market's going to end up reversing on you here, right? Well, look at this. If volatility is already high, this is telling you guys that you're above normal volatility right here. And, the moment that, that this comes down right there, which is this bar, this is telling you that you're not gonna have a directional move down anymore, okay? In fact, it's gonna likely go up. And sure enough, look at this. You get cycle right here, goes up above zero, and this bad boy goes up. And it perfectly captures the trade right there. The moment you get in right there, you go in all the way, and this crossing is at this bar. Cycle and momentum with CYMO perfectly capture this upside move right here. I mean, this is like, 5 days ago, guys. You can't get better than this, okay? And volatility is telling you that, hey, volatility is probably gonna die right here. Then you better keep your eyes open for a potential reversal. And this kind of confirms that this trade is valid to the upside as well. So there's a lot of nuances that I'll go over in the next couple of days. You can see this a lot better. Nice tool. You want to use it? Awesome, JBM. We'll get it to you hopefully this week as soon as I get approval from NinjaTrader. This is a tool you want to have in your arsenal, guys. Okay, it's a very important tool to have. And it's a free tool. It's not the tool that I've been working on for the longest time, but this is just one of the tools that I felt, this could be a nice addition to your arsenal just to help you guys spot volatility. And I'm going to throw that out there for you for free.